I'm about to do something most precious metals investors think is crazy. I'm ditching gold and going all in on platinum for 2026. And before you click away thinking I've lost my mind, let me show you the numbers that changed everything for me. Platinum is trading at a massive historic discount to gold right now. We're talking one of the lowest ratios in modern history. And I'm not just talking about it, I'm putting my money where my mouth is. This is my platinum stack, and I'm about to add more. By the end of this video, you'll understand why platinum might be the opportunity of the decade and why I'm betting real money on it. I am Turbo, and this is Turbo Stacking, where we stack with purpose. Let's roll. All right, here's what you need to understand. Platinum is trading at a massive discount to gold right now. We're talking a 0.37 ratio. That means platinum costs only 37 cents for every dollar of gold. To put that in perspective, gold is over $4,100 an ounce right now. Platinum, it's around $1,555 an ounce. For the price of 1 ounce of gold, you could buy almost 3 ounces of platinum. Historically, platinum has traded at a premium to gold, sometimes dollar for dollar, sometimes even higher. In the 1990s and 2000s, platinum regularly cost more than gold. We're talking ratios of 1.2, 1.5, or even 2 times. Right now, at 0.37, this is one of the deepest discounts in recorded history, and that's exactly why I'm making this move. Now, you might be thinking, okay, platinum is cheap compared to gold, so what? Maybe there's a reason for that. Fair question. And here's the thing. There is a reason platinum has been undervalued. Diesel emission scandals, COVID supply chain disruptions, and a general lack of investor interest. But those headwinds are reversing. Meanwhile, the fundamentals are screaming bullish. We're talking supply deficits, industrial demand growth, and a metal that's 30 times rarer than gold trading at a fraction of the price. This is the kind of asymmetric opportunity that doesn't come around often, and I'm going to break down exactly why I'm betting on it, with real numbers, real data, and my actual platinum stack. Let me give you some historical context because this is where the opportunity really becomes crystal clear. For the last 100 years, platinum has typically traded at a premium to gold. In the 1990s and early 2000s, platinum cost 1.2 to 2 times more than gold, even after the 2008 financial crisis. It rarely dropped below 0.7. Why? Because platinum is rarer, harder to mine, and has massive industrial demand. It's used in catalytic converters, hydrogen fuel cells, medical devices, and electronics. Gold? Mostly jewelry and investment. Platinum actually gets consumed. But right now, we're at 0.37. That's platinum costing only 37% of gold's price. This is one of the lowest ratios we've seen in modern history, and it creates an asymmetric opportunity. Think about it this way. If you believe platinum will eventually return to its historical relationship with gold, not even a premium, just closer to parity, you're looking at a massive upside from current levels. And here's the kicker. The downside is limited. Platinum has a floor because of industrial demand. It's not going to zero. But the upside, if the ratio normalizes, we could see 1, 2, even 300% gains. That's why I'm making this move. The risk reward is asymmetric, and I'm going to show you exactly how I'm playing it. All right, let's talk fundamentals, because this isn't just about historical ratio. It's about supply and demand. Supply side, platinum is rare. Only about 6 million ounces of platinum are mined globally each year. Compare that to gold at 100 million ounces. Platinum is 30 times rarer than gold. And 70% of the world's platinum comes from just 2 countries, South Africa and Russia. That's a geopolitical risk premium built right in. But here's where it gets interesting. Platinum mining is expensive and energy intensive. When prices are low, like right now, mines shut down or reduce production. We've already seen this happen in South Africa over the last few years. On the demand side, platinum is consumed. Unlike gold, which mostly sits in vaults, platinum gets used up. About 40% of global demand comes from automotive catalytic converters. Another 30% goes to industrial applications. such as hydrogen fuel cells, medical devices, electronics, and petroleum refining. And here's the kicker. The World Platinum Investment Council reported a supply deficit of over 1 million ounces in 2024. That means demand exceeded supply by a massive margin, and they're projecting continued deficits through 2025 and beyond. Supply deficit plus industrial demand growth plus geopolitical supply risk equals a bullish setup. Now, add in the fact that platinum is trading at 0.37 ratio to gold, a historic discount, and you start to see why I'm making this move. The supply-demand fundamentals are tightening. The ratio is at historic lows, and the upside potential is massive. That's the investment thesis in a nutshell. Okay, so enough theory. Let's talk about what you'll actually pay if you want to stack platinum today. Spot price versus premium. As of this recording, platinum spot price is around $1,555 per ounce, but you're not buying at spot, you're paying premium. So here's what that looks like across different products. The American Platinum Eagle. These are the most recognizable and liquid platinum coins. You're looking at premiums $300 to $340 over spot. So for a 1 ounce Eagle, you're paying around $1,860 to $1,918. Higher premium, but maximum liquidity. The Canadian Platinum Maple Leaf. Premiums run about $145 to $165 over spot. That's about $1,708 to $1,740 for a 1 ounce Maple Leaf. Lower premium than Eagles, still highly liquid and 0.9995 fine platinum. And then you have platinum bars, the lowest premium in the game. You're looking at between $35 and $190 over spot. So about $1,690 to $1,778 per ounce. If you're stacking for weight and don't care about numismatic values, bars are the way to go. Fractional platinum, 1/4 ounce, 1/3 ounce, 1/2 ounce, even 1/10 ounce. These have higher premiums per ounce but lower upfront costs. A 1/3 ounce coin might run you $550 to $580. Great for dollar cost averaging, or if you're on a tight budget. Compare that to the 0.37 ratio discount and you're getting incredible value. You're paying small premiums on a metal that's historically traded at a premium to gold. I just checked prices this morning. APMEX has 1 ounce maples for $1,722. SD Bullion is running a sale at $1,740, and JM Bullion, look at that, has them at $1,708, about 10% above spot for a highly liquid government minted coin. And if you want to start small, 1/3 ounce coins are running about $545 right now. That's less than the premium on a single gold eagle, and you're getting exposure to platinum's upside. Here's my recommendation. If you're buying your first platinum, go with a 1 ounce Canadian maple or a bar. You get the best premium to liquidity ratio. If you want maximum liquidity and don't mind paying extra, Eagles are solid. And if you're dollar cost averaging on a budget, fractional platinum maples or Australian kookaburras let you stack consistently without huge upfront costs. The key takeaway? Platinum premiums are low right now compared to gold and silver. You're not getting gouged. This is a buyer's market. All right, let me show you what I'm actually stacking. Full transparency here. I currently own 4.25 ounces of platinum. Not a massive stack, but it's more than most precious metals investors own. And here's why that matters. Most stackers are 90% silver, maybe 10% gold, and 0 platinum. They're missing this opportunity entirely. My platinum holdings are a mix of coins. I've focused on keeping premiums low while maintaining liquidity. Every ounce I own costs me less than $1,000, some significantly less when bought during dips. And I'm about to add more. I'm seriously considering picking up a 1/3 ounce coin this week for that $545. Why? Well, because current premiums and the 0.37 ratio, this is one of the best buying opportunities I've seen in years. Let me put this in perspective. For the cost of one ounce gold eagle, around $4,200 to $4,300 of premiums, I could buy almost 3 full ounces of platinum. Same money, triple the weight of a metal that's 30 times rarer. Now, I'm not saying dump all your gold. I still hold gold, but I'm shifting my new purchases heavily towards platinum because the risk reward is so asymmetric right now. This 4.25 ounce stack represents real money. It's about $6,800 at current prices with premiums. And I'm willing to show it on camera because I believe in this thesis that strongly. Here's my plan for 2026. I'm targeting 10 ounces of platinum by year end. That means adding roughly half an ounce per month through dollar cost averaging. Some months I'll buy fractional coins, other months I'll stack full ounces if I catch a dip. And I'm going to document this entire journey on this channel. Every purchase, every price point, every strategic decision, full transparency, because I want you to see exactly how I'm playing this opportunity and whether it pays off or not. That's the commitment I'm making. This isn't just a video, it's the start of a series, and you're going to see the results in real time. All right, let's talk about the elephant in the room. What's the upside here? What am I actually betting on? Let's run some scenarios based on the platinum to gold ratio normalizing. And I'm going to be conservative here. I'm not assuming platinum reclaims its historical premium over gold, just the ratio moves closer to the historical norms. Scenario 1 is the ratio moves to 0.7. This was common in 2008 to 2020. Nothing crazy. If platinum returns to a 0.7 ratio with gold at current levels, we're looking at $2,855 per ounce. That's an 88% gain from today's $1,555 spot price. My 4.25 ounce stack, it would be now worth $12,134. That's a $5,300 plus dollar gain. And if I hit my 10 ounce target by year end, we're talking $28,550 in value, a $13,400 gain from current levels. Scenario 2, ratio moves to 1.0, just parity. Scenario 2, ratio moves to 1.0 or parity. This is what platinum held for decades before 2015. Not a premium, just equal pricing with gold. If platinum reaches parity with gold at $4,100, we're at $4,100 ounce platinum. That's a 169% gain. My 4.25 ounce stack, well, that would now be worth $17,340. My 10 ounce target, worth $40,800. We're talking life-changing money from a relatively modest precious metals position. Scenario 3, ratio moves to 1.5. This is where platinum traded in the 1990s and early 2000s. Platinum at a 50% premium to gold. If we hit 1.5 times with gold at current levels, we're looking at $6,120 per ounce of platinum. That's a 304% gain. My 4.2 ounce stack now worth $26,000. My 10 ounce target, $61,200. That's generational wealth territory from stacking a single precious metal. Now, I'm not saying scenario 3 happens overnight or even in the next 2 to 3 years, but here's what matters. The downside is limited. The upside is massive. Platinum has a floor because of industrial demand. It's not going to $500. It's not going to zero. But if the ratio normalizes even partially just back to 0.7, you're looking at near double returns. That's asymmetric risk reward. That's why I'm making this move. And that's why I'm betting real money on it. All right, before you run out and buy platinum, let me give you the other side because every investment has risks and I'm not here to sell you a fairy tale. Risk number 1, the ratio could stay low longer than expected. Markets can remain irrational longer than you can remain solvent. Rick Rule. The 0.37 ratio might persist for another 2 to 3 years. Platinum might even drop to 0.3 if gold rallies hard. You need patience and a long-term horizon. Risk number 2, industrial demand could weaken. If we hit a global recession, automotive production drops and platinum demand suffers. This is a cyclical metal. Economic downturns hurt platinum more than gold. Risk number 3, liquidity is lower than gold to silver. Risk number 3, liquidity is lower than gold and silver. Platinum is less liquid, fewer dealers carry it, spreads are wider. If you need to sell it fast, you might take a haircut. This is a buy and hold play, not a trading vehicle. Risk number 4, premiums could spike on the sell side. When you buy platinum, premiums are low. When you sell, dealers might offer you closer to spot or even below. You need to factor in round trip costs. Here's my take. These risks are real, but they're manageable. I'm not betting my entire net worth on platinum. I'm allocating a portion of my precious metals stack to a high conviction, asymmetric opportunity. I'm buying with a 3 to 5 year time horizon. I'm dollar cost averaging to smooth out volatility, and I'm treating this as a long-term hold, not a flip. If you can handle those risks and you believe, like I do, that the platinum to gold ratio will eventually normalize, this is one of the best opportunities in precious metals right now. All right, here's what happens next. I'm committing to this platinum strategy publicly. I'm targeting 10 ounces by the end of 2025, and I'm going to document every purchase on this channel. Next week, a new video I'm dropping comparing platinum eagles versus maples versus bars. Which one should you buy? I'll break down premiums, liquidity, and the best strategy for stacking platinum on a budget. The week after that, I'm showing you how to stack platinum with fractional coins, the 1/4 ounce, the 1/3 ounce strategy for dollar cost averaging without huge upfront costs. This is a series, this is a commitment, and you're going to see the results, good or bad, in real time. So if you want to follow this platinum journey with me, hit that subscribe button and turn on notifications. Drop a comment below and tell me, are you stacking platinum? Are you thinking about it? Or do you think I'm crazy? And if you found this video valuable, smash that like button. It helps the algorithm show this to more stackers who might be missing this opportunity. I'm Turbo, and I'll see you in the next one. Keep stacking, stay smart, and let's ride this platinum wave together. Stack with purpose. Turbo out.